just some ways that would be easier to answer some questions from Twitter. This morning I was working out before we went to Mass. I felt good, so I was working out. And before we went to Mass, I was tweeting, and then I get a bunch of DMs and PMs, or whatever you call them, whatever you young people call them. And on the DMs, I'm trying to answer the questions as best I can. So I figured that we just jump onto Zoom and do it here, where we can, kind of have a live conversation, and I can answer whatever questions you guys have. The one thing I would do is sometimes, when we open it up to the public, people can come in and be assholes. So, let's not be assholes. Let's respect one another. And I'm not trying to market anything. I'm just sitting in here talking about the markets and talking about what I love to do. So, let me give you a little bit of background into who I am and what I do, how I got started. I'm the son of an immigrant from Ireland. My mother was Irish American and Croatian American, second generation, and I was. So I say that because I didn't come here, or I didn't come to the exchange with any money. I didn't have a rich uncle. I didn't have any, clout. Whatever I had to do on my own. So I was driving a truck for my uncle, my dad's brother. He owned a small trucking company in the back of the yards neighborhood in Chicago. I was born and raised on the south side of Chicago. And this is kind of a pain in the ass. I'm on my iPad. I don't know how to do that, Johnny. It's going to have to be one of the other guys. Anyway, I was born and raised on the south side of Chicago, and went to De La Salle High School. If anybody knows anything about Chicago, De La Salle is where the Robert Taylor homes used to be, on the other side of the Dan Ryan Expressway from a neighborhood that I lived in when I was a kid, Bridgeport, by Sox Park. One of the things I love about trading, one of the things I love most about trading is the market doesn't discriminate against anybody. And that's part of the story I was starting to tell before these two jagoffs jumped in here. The market doesn't discriminate. It doesn't care whether I'm rich. It doesn't care whether I'm poor. It doesn't care if I'm white or if I'm black or if I'm Hispanic. It doesn't care. It treats us all the same. I learned over the years to not fear the market. I don't fear goofs like him, and I don't fear the market. So people like this have absolutely no place in my life. They have absolutely no place in the market. They're going to get destroyed. So who cares? Say la vie, go fuck yourself. Sorry for the language, guys. Happy Sunday, right? So I was born and raised on the south side of Chicago. Obviously, when I get pissed off, you can really hear my accent. I know that. I'm a father, 5 kids, married 17 years. I was married previous. My 2 older kids are from my first marriage. I have a 23-year-old and a 21-year-old. And then my wife and I have 3 younger ones. My wife was a clerk on the floor for 18 years. She was a clerk for many brokers, many locals. I was tweeting about that this morning with Dr. Denise Schul and with Patrick Rooney when we were talking about journaling. Anyway, I'll get to that. So I started on the trading floor as a runner in 1989. And I not because I had any aspirations to be a trader, but because I was driving a truck for my uncle, and my father found out that I wasn't going to college anymore and said, go to work for the city, get a job as a cop or fireman, streets and sanitation, any of that stuff. Thank you. I appreciate that. And sorry for, the rude assholes comments above that. We kicked them out. And anybody else rude, I got no time for you. I mean, honest to God, the markets don't discriminate, so why in the fuck would you? Goofs. God almighty. All right. Now, so I started in 1989 as a runner, not because I had any, the only thing I knew about the exchange was a guy in my neighborhood, Pat Finley, who changed his name to Pat Geronda. He started off, he didn't graduate from high school. He went to the same high school I did. But by the time he was in his mid-20s, this guy was rich. Everybody in the neighborhood knew him. He was a huge benefactor to De La Salle where I went to school. And that's the only thing I knew about trading. So I thought, oh man, I want to be a part of this. What is this? Whatever it is, I want to find out about it. So a friend of mine, one of my best friends, Frankie B, got me a job as a runner. He worked for Rosenthal. It was just Rosenthal then, not Rosenthal Collins or not Rosenthal Collins Group or RCG. but just plain Rosenthal. So he got me a job, started as a runner making $90 a week. And I knew when I walked down on that trading floor, I knew whatever the hell is going on down here, I want to be a part of it. I loved it. The energy was incredible. It was right after it was like a year after the crash of '87. So the S&Ps were dead. There was no volume. The action was in the currency pit, and also the Eurodollar pit was really starting to pick up and shine. So I got a job. My first clerk job was in the lumber pit holding a deck, and I loved it. It was great. It was the first time that somebody told me that I was good at this, that I was a natural at it, and that I would be able to find if I stuck with it, that I would have a career as a trader. So I loved it. And I learned how to do the hand signals. I became an arbitrage clerk, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 20, 30, 40, 50, 60, 70, 80, 90, 100. 1, 2, 300, 400, like 450, 455. So, if you're buying them, your hands are out here. If you're selling them, your hands are out here. So quantity at your face, price. I don't know if anybody's interested in any of that, but so I learned how to do that. And that was like the minor leagues for baseball. I had, as I was holding a deck in the lumber pit, I learned more and more about the business, and I knew that this is what I really wanted to do. And I quickly found out that most of the great traders on the floor didn't have college degrees. A lot of them didn't have college degrees. None of them had master's degrees. All of them were just neighborhood guys like me, that just kind of brought the street smarts and what they knew how to do onto the screens, or not into the screens, but into the pits. So I got a job doing arbitrage, quoting the market through hand signals, and relaying orders and fills back and forth to houses. And that was like the minor leagues. I got a job with the Ojo Manini Group. That was single A, double A ball. They moved me from the back months to the third and fourths in the Eurodollars, and then up into till I got hired by Steve Mendez and his company, SRG Financial, in the front month. And once you got hired by one of those groups, now you knew you're in. But you had to, there was no training period. You either sunk or you swam, and I decided to swim, man. This was my only shot. Now I am 23 years old. I'm making $1,000 a week. I'm working my ass off. Pat? He's a great guy. Pat, he switched his name to Geronda. I was friends with his brother Georgie for a while too when we were in high school. Oh my God. He had a house in Bridgeport on 31st and his house was on the same block as the old Mayor Daley's on Low, 35th and Low, just south of the corner. They had gold faucets in their house. I'll never forget that. We were trying to, one night where Georgie fell asleep, Pat was gone, and we were trying to take the fucking gold. We were trying to unscrew the gold faucets and take them with us, me and Frankie. Anyway, so I think anybody who would work on the floors know exactly what I'm talking about. I didn't have, nobody in my family made any money. My uncle owned a small trucking company. That was it. My dad sold whatever the hell he could sell in order to put a roof over our heads. So it was either, do or die for me. And I knew that once I got hired by SRG Financial, Steve Mendez, that I had to make it work, and I did. It was an incredibly stressful time. I'm a young guy, 21, 22 years old. I'm making $1,000 a week. And that was big money for us. That was more money than what my father made at that point. I was making $1,000 a week. That was big, big money. I had a Cadillac. Oh, man, I was a big spot going. I had a Cadillac Eldorado Baritz, so it was nice. Anyway, the big problem that I had, and the problem that I'm going to describe to you is also something that carried over into my career, and that's something that I struggled with a great deal. Was I didn't see what I liked. The fact that I enjoyed what I did. I loved the camaraderie on the floor. I loved the battling on the floor. I loved the competition, but I didn't see what value I provided to the world. It was kind of an empty feeling. I think that that's part of, the stress of people that was a major part of the stress for me in the business was, what am I doing here? You know, and my mother was a daily communicant Catholic, as was my father. So I ended up, Steve Mendez offered me my membership with Marty Walsh to go and expand his business in the second option, the $0 pit. And I raised my hand. I wasn't planning this. I raised my hand and said, Steve, before I sign a contract and get my membership with you at the exchange, I think I want to be a priest. And a room full of Jewish and Irish and Italian guys, you know, just throwing my hand up and saying, I'm going to go to the seminary instead of locked in, making a couple $100,000 a year locked in, was, you know, with the possibility of much more, was, I think, a shock to many, as it was myself. But I did. I went to the seminary for 3.5 years. I studied for the Diocese of Peoria, Illinois, down in central Illinois, about 3.5 or 2.5 hours south to 3 hours south of where we live here in Chicago. And it was a great time. I studied philosophy, theology with the minor in history. I finished school. I loved it. I made some lifelong friends. It was wonderful. All right. I'm getting too far into this fucking story and I didn't want to get into it. So let me fast forward. I started trading. I went to the seminary, spent 3.5 years there, came back, and within a year I was married. I had a baby, and I started trading. Mendez had given me my membership and told me to come up with the trading capital. As long as I came up with the trading capital, he would back me. And at that point, that was a $50,000 commitment on his part, at least. He told me I needed to come up with $10,000. I did. I couldn't. I walked into the pit. Nasdaq pit, because that was going to be the last great pit to trade in. I walked into the Nasdaq because everything else was dying. The Nasdaq was just starting. We started the pit in 96. This is in 97. So there were 30 people in there trading. I quickly made like $5,000 because everybody would come in and the clerk that was well known on the floor would, you know, the older traders would come in and say, Pax, what are you doing? Sell you 5, I'll buy 5. I'll sell you 2, I'd buy 2. You know, so they give you a few hundred, a few thousand. So I think I started off, I had 10,000 in my account. I got boned up for about $5,000. 15,000. Within 6 months, I had $250 left. I was going to, I had taken Mickey Hoffman's class. I started to take Mickey's class to learn how to trade on the floor. It was called the University of Trading. And Mickey, who became very much like a father to me and still is, I went and spoke to Mickey. Mickey was going to hook me up with some traders to back me. You know, they were going to put up the capital. You guys know what you guys all know what prop trading is. This was prop trading on the floor. Put up the trading capital, take half of what I make. I was talking to a kid. I was smoking a cigarette. I smoked that one after the other. And I go outside and I'm talking to this kid, Mark Weil, and Mark, a Jewish kid, told me, you know, I told him my plan. He said, Matt, you know, why would you want to give away half of what you're going to make for the next 3 years? This is going to be the last great pit on the trading floor. And you're going to give away the only good years of your career. Come on, don't do that. Don't do it. Figure out a way to make it work. Go borrow money. There was nobody in my family to borrow money from. I walked up to the trading floor right after that conversation, and I met Steve Mendez, the guy who backed me, was walking around with another man who would become my mentor, Judd Hirschberg. Judd had some issues in the 90s, so he wasn't able to trade. He was looking for traders that he was going to help mentor, help teach. So here I am, a kid from the south side of Chicago, you know, high school, De La Salle High School, right down the street from the Robert Taylor homes. You know, in my neighborhood, there was, you know, we grew up in very segregated neighborhoods, you know, Irish neighborhoods, Polish neighborhoods, Italian neighborhoods. Now, all of a sudden at De La Salle, it was a third black, a third white, a third Hispanic, with some, you know, 10% Chinese thrown in there. Chinatown's not too far away. That training ground really prepared me well for you know, just how to react and how to trust myself on the floor. You know, being in an inner city high school really gave me the training that I needed. Of course, with sports and then the seminary thrown in, I felt like I had a lot of things to really start to propel me forward. So I met Judd. Judd told me I still have the statement, $251 left in my trading account. And Judd told me, $1,000 a week. You got to pay me $1,000 a week. I said, Judd, juice, are you kidding? Jeez, I got $250 left. How am I'm bartending 6 nights a week. I got a brand new baby I see on Sundays. What am I going to pay you with? My shoes? He said, no, you pay me at the end of the month. 4,000 at the end of the month. 4,000. I haven't seen 4,000 since I was a clerk. So, I had nothing to lose. I said, okay. So Judd started to teach me about the opening range. The Nasdaq at that point was good every day for 8 points out of the opening range. The Nasdaq was $100 every one contract, $100 a tick. I bought one at 41. I sold it at 42. That's $100. I had $250 left in my account. So we're Judd and I are a week into our relationship. He had me meeting him every morning at 6, and I had to read the Financial Times cover front to back before I met him. If I didn't, he'd get up and walk out. And I'm bartending at night. I'll get to your question in a second. I'm bartending at night. So, yes, there are plenty of people that back traders. There are. So I'm bartending at night, 6 nights a week. Like I said, I get home at midnight, 1, 2 o'clock in the morning. I'm living up in Glencoe, up on the North Shore of Chicago. I know nobody up there, and I didn't belong. They saw me walking down the street, and that kid's from the South Side. Get out of here, beat it. I mean, I think it was kind of obvious. Anyway, so I got all of this going on, and I meet Judd. He starts telling me about the opening range. Takes me a week, 2 weeks before I made my first trade, because I had $200 left in my account. What am I going to do? So went ahead and finally, Judd was standing next to me, and he basically made the trade. The broker was offering one at even, and that was the top of the opening range, and it was coming out. He said, "Matt, buy that one, buy that one." Judd said, he said to the broker, it was Jayhawk. I'll never forget it. Jayhawk, PAX bought that from you. Write it down, write it down. By the time I can write it down, it was like an $800 winner. Holy cow, a bonanza. I'm back in the game. I got $1,000 in my account. I turned around and I sold it the second I could. When when I wrote it down, even bid, 1 bid, 2 bid, 3 bid, 4 bid, 8 bid. So you won. It was like a $3,000 winner in 30 seconds. But I didn't care. I was happy. I made my first trade. I got my feet wet. I've got $1,200 in my account, or $1,000 in my account, and I felt great about myself. Next day, $1,500. Day after that, $2,000. Day after that, $3,000. And there's a point to this, okay? I started to pile money on top of money. At the end of the month, I paid Judd his $4,000, and I quit my job bartending at the end of my first month working with him. And there's a lot of reasons for it. One, the opening range trade worked back then, and Judd told me, one thing that he told me is, I will teach you a way of trading that works on the floor, off the floor, on the computer, off the computer, any time in the world, in any market in the world, if you do it correctly. So, I'm all in now. I'm piling money on top of money on top of money. I paid Judd his $4,000 at the end of the month. I was still going to Mickey's class 3 times a week, 2 times a week. And I felt like I'm starting to get my feet back under me. I had no fear because I was young. I had no fear of the market. Within 6 months, I had my second 6 months of my trading career, I had made $500,000. My ex-wife and I were building a home, it was a cookie cutter home, semi-custom Jober up in Gurnee, Illinois. I was off to the races. Now, a couple of reasons. One is I was at the right place at the right time. I went to the right pit at the right time. It was right at the beginning of yes, please. You guys, please ask any questions you want, because I can sit here and talk about, the history of my story. I can talk about everything, but there's a couple of points that I wanted to make here. The opening range worked then, and it worked on the floor. I learned how to trade. I learned how to target out the market. One thing I think is very important to understand is that, when I was on the trading floor, go ahead and type your question in, will you? Because only because we had some people write some incredibly rude and racist things above just to fuck with me, and I don't appreciate that. So I'm very shy. I'm very not shy. I'm very reticent to unmute anybody just to, that I don't recognize your name. I nothing against you. It's just, you can scroll above and see what scumbags wrote. Anyway, I learned how to trade the opening range. I learned how to target out the markets. The Nasdaq was in the infancy of the tech bubble. I'm a young guy. I have no fear of the market. I'm starting to make money. And it was a beautiful time. It was, the time that I think that we all experience, not just in our careers, but in life, where you're young, you got the world is all of a sudden popping and making sense and things are great. Whew, it was a wonderful time. Only I was a miserably married man. I was very unhappy. And I struggled a great deal with what am I providing the world? 5 years ago, 3 years ago, 2 years ago, I was in the seminary. Now I've got a wife, a baby, and all I'm doing is I'm making markets for hedge funds to get their, or Goldman Sachs to hedge their portfolio, or hedge funds to hedge stuff in the Nasdaq pit. That really weighed on me. It really did. And not to mention the fact that nobody in my neighborhood, none of my friends, white, black, or Hispanic, or white, black, brown, or whatever, nobody had any money. I mean, we were all just working class kids. I had a little survivor's guilt, I think, too. But the opening range was something that did work on the floor, as it does now. The opening range is something that started back in according to Stan Yarbo from CQG, began to be traded back in around Dow theory, when Dow theory was invented, around 1908 or 1913, something like that. And the way that I define it is the same way that we defined it on the trading floor, the first 30 seconds of the market. There's an opening range every day, and there's a closing range every day. You guys can see it every time the market, every time the S&P opens or the Nasdaq opens. You can see, if you go to a volume bar, you can see the kick in volume. We'll trade 800 contracts in a 30-second period, or 200, 400, 500 contracts in a minute period. And then 8:30, when the algos are turned on, volume goes from 800 to 12,000 in that 30-second period. Now, the opening range is, Friday's opening range, for example, 38.04 to 38.08, I believe. I've got targets because I didn't have access to charts on the floor. And think about that. I could not trade 30 seconds. I cannot trade off of charts on the trading floor because there were none. In order for then in the 90s, they started to put CQG computers all over the floor so you can go find them. I would have to print off it. I'd have to stand in line, as I tweeted about this morning. I'd have to stand there, and then, and now I've got guys yelling at me, screaming at me, arguing with me about this, that, and the other thing. And, hurry up, get out of there, hurry up. And if you got in an argument with a guy in the pit, now you're trying to print off a chart and you got this guy screaming at you. So the opening range is defined as the first 30 seconds. On the trading floor, the opening range and the closing range, the last 30 seconds. And you can see the uptick in volume when you see the MOC orders, markets on close. Those are executed even still today, the last 30 seconds, not 30 minutes, but 30 seconds. All right. So on the, now there's other uses for the opening range, guys. So don't, we'll get there too. There's you can trade there are some people that'll trade a 5-minute, although I don't understand why that would be, but a 30-minute, an hourly, that makes sense. And Toby Krubel, Mark Fisher are the guys that pioneered, expanding out the volatility. Yes, 67.71 is going to be our upside target in crude. Okay, I'm going to get to the targets in crude too in a bit, or not in crude, but just targets in general. Peter or Adam, make sure you guys keep me on task here, because otherwise I'll just sit here and tell stories and shit, and I don't think anybody really wants to hear any of the stories I've got. So 30 seconds are going to be the, hey, Corinne, oh my gosh, sister, how are you? Corinne, I really want to end up talking. I want to have a conversation one of these days. I just want to hear how you're doing and everything. I really admire you, kid. I love your attitude. I love the way that you're in there battling every day. It's just wonderful to see. It reminded me actually a lot of me. Anyway, so 30-second, the opening range gives me the like a staging area. Think of it as a staging area, okay? So 38, Friday's opening range, perfect example, 38.04 in the S&P to 38.08. Above 38.08, I want to be long. Below 38.04, I want to be short. Now remember, I didn't have access to charts in the pit. So I was taught early on to write my my targets down on a, these are trading cards. You know, it's got my name on them, and I would write on there, you know, that kind of stuff. So I would have in my hand a deck of cards with targets on them going back for days, weeks, you know, whatever. So I knew what I wanted to do. If the market got down to 37.80, like on Friday, I knew that I'd be taking profit. I knew that if we got under 80, I'm going to be trying to add. We get down, my target, big downside target is I trade in quarters. So out of the opening range, I don't trade 4 lots, but you know, any trader that's coming in, I always suggest that you guys trade 4 lots. So the way that I trade this is, remember, it's a staging area, 04 to 08. And I don't care if you trade the names, if you're trading crude, if you're trading Nasdaq, bonds, gold, it works in all of these markets, okay? And the reopen, for example, right now on Sunday night was 54.75. So watch how 54.75, 38, 54.75 in the S&P becomes kind of a pivotal area. I don't trade overnight, I trade during the days, okay? Anyway, now, think of it as the staging area, or think of it as a room, 38.04 to 38.08. In that room, I'm flat, I want nothing on. If we're trading at 38.05, I'm doing nothing. 38.06, nothing. 08 bid, 08 quarter bid, I'm waiting for the market to break out. So we go 08 quarter bid, 08 half bid, I'm a buyer. I pay for my trade, so I trade in 4 units of 4. I pay for my trade in the S&P, it's 4 points. And this is something that I've come up over the years. You know, where is the market? Where are the algos taking this market? That was a major, major, major thing for me, is that I had to learn how to stop fighting the algorithms and start learning how to trade with the algorithms. In the Nasdaq, I don't know if you guys are familiar with Liam Vaughn's book about Navinder, Nav. Is anybody familiar with that book? In the Nasdaq, we had control of that pit. You know, that pit was ours. Then side-by-side trade, the E-minis came out, they started side-by-side trading. You guys all know Jedi Marcus. You know, I don't know, Corinne, I'll find it. I'll find it. Hey, Danny. Flash pass, that's it. Thank you, Dayton. Anyway, I didn't know Nav, but I know who he was. There was the Russian, there was this guy from England that we knew, and there was another, there was another big guy on the screens. And, you know, I was able to move the market. I was able to move the Nasdaq 100 points by myself. Well, all right, 50 points, sometimes 100 points by myself. I was a really big trader. At one point, I was upwards to about 10% of the daily volume. But when side-by-side trading came, it changed everything. And me being, you know, I guess a non-educated guy at that point, I didn't change quickly with it. So I still thought that the locals controlled the market. You know, me and the other big traders can move the market to a certain extent, but fair value is going to come into play when these big guys like Nav or the Russian, who ended up being, I forget his name. I actually know him. I ended up meeting him. He was trading in Chicago, but we just called him the Russian. Anyway, these guys would pick me off. I'd be offering 100 at even, 100 at even. Remember, it was 5 to 1, I think. So if I sold 100 lot in the pit, there would have been, what, 250 or 500. If I sold 100 lot in the pit, there was 500 minis. If I sold 20 in the pit, there was 100 minis. And I'd go to lunch with 20 on without a stop. You know, I'd go to lunch with 50 on without a stop. I go home with 50 on and not care. I mean, it was that busy. You know how this volatility that we've had these last few weeks covers up a lot of blemishes, right? The volume that we've had in these last few weeks really cover up a lot of mistakes. You might be down 1,500 or 2,000 or 2,500, you know, in the minis, and all of a sudden you catch a nice trade and you catch up that, you make that money back and you're back into the green. I had to learn how to take what worked on the trading floor and stop fighting the algorithm, stop fighting the side-by-side big traders that had the algorithm, the benefit of the algorithm trading in front of them. And I had to take a step back, and I had to learn how to adapt it on the floor. Now, if I didn't have this series of events that have happened to me, you know, in between 08 and October of 2011, I don't know that I would be nearly as good of a trader as I am now. And I don't know that I'd even be here trading now. But I had a prop room, a proprietary trading group that I started with the partner in 07. My mother had ovarian cancer. My sister had leukemia. And my mother-in-law, Jen's mom, had ovarian cancer also. So my mom died in June of 08. My sister died in November of 08. And my mother-in-law died in February of 09. I missed the entire crash. That whole market, I missed it. Meanwhile, our prop traders were just failing. It was a miserable time, and I can get more into it, but it just was bad. I brought some of my friends in to kind of, from the floor to come in and manage my group, but it just, that was a bad scene too, because they were trading poorly. So when I came back, I closed shop and I sucked up the loss, and that cost me a few million. Out of my divorce, I had given my ex-wife and my kids 60%, or my ex-wife 60%, each kid 10% into their trust funds. And then I bought them a house with mortgage in Lake Forest, Illinois. So I came out of that divorce with a few million to stay in business. And I think I gave away 20 or 30, something like that. Not gave away, but I gave it to my family, who I made it for anyway. So anyway, fast forward to 08, 09. After that, I traded for Pete Stottlemyre for a little bit when he was trying to bring me and another trader traded for Stottlemyre when he was trying to update market profile into the age of algorithms for, I think, like 6 months. It was an interesting time. That got me back into the trading mindset, and I went into the hog pit then. And I started to learn how to spread hogs, and I loved it. I was doing great. I ended up building up my business again, going into October of 2011. I had 1,500 hog spreads on, and I had a couple of $1 million in my account to cover my margin. I had over $1 million into profit into them, and I couldn't get on the trading floor. It was that was the straw that broke the camel's back. I couldn't get on the trading floor, and there were rumors leading up to that about MF Global being in trouble. But within a minute and a half, I quickly found out what was going on. Well, it was gone. That was it. I hired attorneys. Everybody told me I didn't know what to do, so I hired attorneys to help me figure it out. And RJO was going to make our positions good. FC Stone was going to make them good. It was chaos. Nobody knew what was happening. Hey, Tristan, what's up, kid? Nobody knew what was going on, and I just started pouring 100,000 here, 100,000 in my account, and I'm trading from my office up, and I'm trading the S&P from my office, Nasdaq, mostly Nasdaq. I'm trading like an animal, I'm losing 50 grand a trade, and then I'm wiring more money in there. I'm wiring more money in there. Yeah, that was not trading. I tweeted about this earlier today. Trading has got nothing to do with gambling. Gambling's got nothing to do with trading. But what I was doing then was I was gambling. That's it. I'm rolling. And in fact, my ex-wife said to me one time, and it always stuck with me, I was having a particularly difficult time. We went up to our lake house, and she said, you got a 50-50 chance of making money on every trade. And I thought about that. And I thought, no, not me. I've really got about 10% of making money. On the way that I'm trading, I've got maybe a 10% chance of making money. And at that time, I was trading more size than Goldman was. That was 10% at least of the daily volume, 10,000 minis a day and 3,000 or 4,000 big S&P or Nasdaq a day. And I was spinning my wheels, not making or losing money. It was just gambling, trading like an animal. So now when I went after MF Global and I blew through all of that money, I went back and I talked to Scott Gordon, the CEO of RCG, and I asked him if I could only put 5,000 into my account. And, I played it up like I still have a big net worth, but yeah, PAX, that's it. Fine. Go ahead, do that. Just don't trade more than 5 lots and don't go debit. Just like in the beginning of my career, don't go debit. So I started trading. I went from 100 lot PAX, a month before that, 100 lot, 200 lot PAX and 500 hog spreads at a time, to trading 1 lots and 2 lots. We rented our house in Lake Forest, Illinois, and put it up for sale, rented it out, and moved back to my father's house on the south side of Chicago. My two older kids had trust funds, and my three younger ones were eating off of link cards. I'm not too proud to say that for a while there, for a good 3 or 4 month period, we had a link card to buy us groceries. I mean, overnight, I went from, being comfortable. I wasn't nearly as wealthy as I was a few years prior to that, but we were fine. I had a couple $1 million in my account to absolutely nothing. I had nothing overnight. And of course, whatever cash I had left over, we went crazy with. But I became 1 lot, 2 lot trader PAX again, because my wife, who was on the floor for many years as a clerk, she clerked for brokers and she clerked for a bunch of traders. We went to Florida when I got my first check, my first reimbursement check from MF Global. We rented a house in Key Biscayne, Florida for the winter. This is 2012, so about a year later. And oh, hold on, brother. All right, yeah, I'll get to questions. I'm sorry. So let me kind of tie some of this up. So my wife told me, we were talking, and I said, Jen, I don't know if I can do this. I don't trust myself to stick to, what I used to do, and I don't know how to make it on the floor. Everybody's losing money. Nobody I know is making money. She said, I trust you. I trust you to go figure it out for us. You were the one of the greatest traders that I've ever seen. There were much better traders than me. Trust me. Anyway, her trust in me was enough for me to go back and start to rebuild. When my wife trusted in me, when I couldn't, that was enough. And I tell traders in my group all the time, when you guys come in, trust me. Until you can trust yourself, trust me. I'm not going to steer you wrong. And I always tell them the same thing. If I steer you wrong, if I give you bad information, if you don't become a better trader by being in this group, then you can, go scream and holler from the rooftops all over social media, and I'll admit it, and I'll take it, But all of you guys need to know that you have to trust yourself. You have to trust your process in order for you to be successful traders. If you have any fear, if you're afraid of the market, if you're afraid of losing money, if you're afraid of, I don't know, whatever, then don't trade. Don't trade, please. Don't trade. If you don't trust yourself and you don't have a mentor in your life, or you don't have somebody in your life that you can put your trust in while you're going through the progression of trading, then please don't trade. Shut it down and trade on the simulator. So there is a whole lot here, and I went through too much backstory to kind of bring it up to, I wanted everybody to get a real good feel for who I am, and I don't know if I made that very clear. 1 lot, CO2, a 1 lot is 1 contract. It was just, we call it a car, 1 car, or 1 lot on the floor, because feedlot, right? Or a car of hogs, a carload of hogs, a carload of cattle, or in the bellies it would be 1 lot or whatever. I think 1 lots came from feed a lot. But so I guess it's just out of habit. 1 contract. Yeah. Well, a lot equals a contract. So one lot is 1 contract. So if I bought 1 S&P, I bought 1 lot. Hey, I'll buy 5 lots from you. I bought 5 from you. That kind of thing. So on the screens, when my wife said that she trusted me, now I had to just go figure it out. And I went back to 1 lots, or 1 contract, 2 contracts at a time. And I quickly realized that four contracts for me was the best way to trade, because now it gave me some position management skills that weren't open to me when I'm trading 1 lots and 2 lots. When you're trading 1 lots and 2 lots, you've got to be right. When you're trading 1 or 2 contracts at a time, you've got to be right. Then I started to try to work on where, out of the opening range, where the algorithms taking the market before they decide to extend the market to one of my targets. Because remember, I didn't have charts in the pit. So I started to target out the market like I did on the floor, like I was taught to on the floor. And I would use that opening range as my jump off point. pay for my trade, and I quickly figured out that it's 4 points in the S&P, 10 to 12 points in the Nasdaq, or 20 cents in crude. It equals out to be about $200 a contract. So if I've got a crude trade on and I can't pay for it with 20 cents, I put my stop in for a scratch. Now that's the important part. So trading the opening range, you can chop yourself to bits. I mean, you can get really killed if you're trading on a momentum basis. Every uptick above 08, and you sell them, you put your too often times people will put their stop at the bottom of the opening range. That's something else I do different. If I buy 08s, the market protects me by staying either 08 bid or 08 quarter bid. But if we get back into that opening range, I'm getting out. I've got to protect myself. I've enumerated a bunch of things for our traders, like the 3 rules of engagement, the 4 pillars of capital management. 4 pillars of capital management are pretty simple. 1, I minimize my risk. 2, I remove my risk. 3, I maximize my profit. And 4, I exploit my profit. If I can't do that on every trade, then I don't want to trade. So again, number 1 is minimize my profit. How do I minimize my profit? If I buy 08s, 38.08, top of Friday's opening range, as price comes back through, I sell a 1 lot at 12. So right there, 12. As the market comes back up through 12, everything the market does tells me something about the market. So my first target, my targets don't change. I mean, I massage them, but here, write these down and tell me, and these have been my targets since December, when the S&P contract expired and when the year contract expired. 37.26. And those of you who are in my group will tell everybody exactly. Well, Shelly, you write down the targets. Kick them in there. 37.26. 37.48. 37.26 is where the S&P contract expired in December, where December went off the board. By the way, rollover starts this week. Beware. I'll talk about that in a second. 37.48. 37.77 to 79. 38 even. 38.12. 38.31. 38 half. 38.81. 39.12. On the way down, 39.12, 38.81, 38 half, 38.31, 38.12, 38 even, 37.77 to 79, 37.48, 37.26. That's it. That's all you guys need to know in order to trade. That's all. No charts. That's all. Those are all mathematical targets, and they're incredibly, very, very, very powerful and very accurate, because this is the same exact way that the algorithms have programmed into their HFTs to be able to take the market from here to there, and what they're doing as well. Now, obviously not the HFTs that are trading for a tick or 2 ticks, but so I had to figure out how to put all of this together, and that took me a long time. Took me a long damn time to be able to figure out how to use the opening. What opening range do I want to use? Right? I read, I knew Mark Fisher a little bit, knew Toby Crabell. I read Toby's book? What do I do? Do I use 30-minute, 15-minute, hourly? So I just simply broke it down and I kept it simple. I do, yeah, CO2. I've got a formula that I learned early on, in my career. I got away from it. I stopped when I got lazy, and that's another thing. When I'm pissing away $100,000 at a crack. Come on, I helped birth the Nasdaq. The Nasdaq is such a great contract because I know it so well. It's one of the reasons why I don't trade it, because I have a habit of getting away from my process. And I'll start to maybe get a little stubborn or opinionated in it. I can tell you what my opinion is of the market, but it doesn't matter because I don't trade my opinion. I trade the price action. I missed Friday, but then I tweeted about that. It was a great. Let's just go through Friday from an opening range standpoint. All right. By the way, when the markets open up in a target zone, those are always going to be the best days. And right before our open on 8:30, at 8:30, like 8:29 or 8:28, I always talked like 15 minutes before the market. And we established the fact that we're opening up in that 38 even to 04 target zone. I knew below 04, I'm short, baby. I mean, that's it. Above it, I'm long, because this is a really important point. Now, you're not going to find this on charts. You're only going to find it in learning how to target out the markets the way that I do, which takes a while to do, and all of that. I'm teaching some traders and that I mentor how to do that. But anyway, underneath 3804, again, remember what I said, 37.77, right? But we had a target 37.91 and 93. So I have targets and price points. What they do is they provide me with a roadmap for the market, a way to look at the market and where to take action. So under 04, sell them. So if I sell a 4 lot, I buy 1 at even, I pay for my trade. That's number 2 of the 4 pillars of capital management. I remove my risk, and I remove my risk by paying for my trade, and then I move my stop to either a scratch or break even. Somebody asked me earlier today how much money I'm willing to risk. I'm not willing to risk anything. I don't risk money. I spend it. I don't have losses. I have expenses. Just like any other business, I have to spend money to make money. And this is an incredibly important concept. So number 1 is I minimize my risk. I sell 04s. If the market stays below my entry point, the market's protecting me. So I've got my cursor up into the opening range at like 04 half, 04 quarter. Because one thing that you guys are all going to start to see, if you start to pay attention to this, is how much the market respects the opening range. The market will get out of the opening range and break 20 points, but it will not come back into it unless the algos are stopping themselves out and the break is over. Again, everything the market does tells me something about the market. So I sell 04s, I pay for the trade at even, I have no risk on the trade, I still have 3 contracts on, I move my stop to break even or a perfect scratch. Usually I'll move my stop just inside the opening range, but I've got my cursor on the sell side. As soon as I put in a hard stop, I'm already expecting that I'm going to get stopped out and I'm ready to re-enter. So if the market comes back up, I sell 04s, pay for the trade, market comes back up, trades 04 quarter, 04 half, I get stopped out for a 2-tick expense or a 1-tick expense. I still made money. I locked in a deuce on that 1 lot, right? And I spent 2 ticks. But I've got my cursor at 03 half ready to go. If we go 04 quarter offer again, sold. I do it again. That's how I manage my stops. If I sell 04s and the market protects me, then I'm good. I want trades that are easy. I want momentum that I find quickly and easily that I can remove my risk on. Once I can do that, I'm good. Then I put my feet up. We have a saying in our group, it's easy like Sunday morning. In fact, I wore that shirt today. I don't know if Mark's in here, but I wore that shirt this morning. It's easy like Sunday morning. So once I remove my risk on my trade, I put my feet up. It's easy like Sunday morning. Now it's all automated. It's all hey, Marco, it's all automated. I'm short at 04. I paid for my trade. My stop is in. I put my bids in below the market. 37.80, I always put my bids in front of the target. So if my target was 77.79, I put my bid in at 80. If we get below 77, let's say I'm short that 4 lot, right? I buy 1 to pay for my trade at even. We get down to 80, I buy another 1. Now I'm short half my unit. I'm short 2. I have the choice. We take out 77. I've got a choice. I can either add back the part of the unit I took off, or I can add a full unit, or I can just, let the market do the work and tell me which way it's going to go. Because markets are always going to simplify your trading, folks. The market's always going to do one of 3 things. It's going to go higher, it's going to go lower, or it's going nowhere. In which case, all we need to do is have a way of visualizing the market, seeing the market go from point A to point B, and how do you protect ourselves? Now, in markets that are very choppy, in markets that are hard to get out, markets where sell 04s, it's 05 bid, sell 04s, 05 bid. The way that I protect myself from chopping myself up, and this I learned from Tudor Jones, is after 2 attempts that I don't either pay for my trade or I have a perfect scratch, I cut my size in half. So if I'm trading 8 lots, well, I cut my size. If I'm trading 4 lots, and I'll cut it to 3 lots, but I don't trade 4 lots, remember. So, if I'm trading a 16 lot, I'll cut my size to an 8 lot. If I'm trading an 8 lot, I'll cut it to 4, right? So, and then I give myself 2 more attempts. So after 2 attempts, if I don't find the momentum, I cut my size. After 2 more attempts, if I don't find the momentum, I put myself on the sidelines. at least in markets like this. I'll put myself on the sidelines. If these are summer markets, after my, I call it my 2x4. After my 2x4, after one 2x4, 2 trades, cut my size, you know, another 2 attempts, and I got small expenses. That's it. I'm done. I'm done. In like summer markets, my day's over with. I'm going to wait for the market to come back. I mean, I'll come back tomorrow. I'll come back and, you know, get up and make a pot of tea. You know, I'll watch. I'll be there. But these markets are so busy. I want to be a part of it, man. I want to be there. So back to our example from Friday. Sell a 4 lot, pay for it, put my bid in at 80. We take out 77. Now I'm expecting the market. The market's going to go from one target to the next, one rung to the next, like a ladder, right? And same way down. Opening range to 79, 79 to 48, 48 to 26. So we get underneath 77, 37, 77. Now I've got, we had another target at 61 or 62, I believe. Take profit there. I got my runaround. We get down to 37.48, which is the yearly opening range. 37.48. Not all targets are created equal. So, and in my plan, I write down Europe's, Asian Open is. Asian Open is only, but I don't trade it. I only, and that's another thing is over the years when I was trying to figure out this whole, you know, system of what worked on, you know, how to apply what worked on the floor to what works on the screen. I was trading the European Open. I was trading the Asian Open. I was napping. That's all I was doing. And I get up and I trade the US Open. And that's actually how I came to form like my daily habits. And my daily habits are incredibly important to me. You guys have all seen me tweet about being confident, carefree, fearless, and focused, CCFF. I get up every morning at 4:45 every day. First thing I do is I make my bed. If my wife is still in it, she usually wakes up with me. If my wife's still in it, I make my end of it. But it's super important to me to make my bed. And then I do some breathing exercises I've got to reboot my brain. It's like a computer, right? I got to get blood flowing. I got to get oxygen flowing through my body. And then I do some light yoga. And then I do a morning meditation, a guided meditation, or I'll pray, you know, I'll pray a rosary. I'll just pray the Psalms. I am still relatively religious. And then after my meditation and my prayer time, I come down to get a cup of coffee and I look at the market and see where the market was and all of that stuff, right? So 4:45, Corinne, every morning, 4:45, even on the weekends, I've been getting up relatively at the same time. And, you know, when I wake up, this is important too. When I wake up, my first thought in the morning is, oh, golly, man, I got to get up. Oh, God, I got a million things I got to do. Oh, Lord. I wonder what the market did overnight, you know, but it's the second that my feet hit the ground, it all melts away, you know. All right, great. You know, I go and sit we have a nice bedroom suite, you know, I'll go sit in the other room of the bedroom suite. And that's when I put some music on and I sit there and I do my breathing exercises. Sometimes I do it in silence, but I also go to bed at the same time every night. I go to bed every night at 9:30. I'll read in bed, or Jen and I will watch a movie or something, and I'll hopefully fall asleep by 10. And I work out, you know, I run, I work out. You know, I've got some health issues that I'm working through right now. So I'm not working out nearly as much as I could, but I also spend a lot of time with my kids. Spending time with my family is so important to me. It's really part of the hard work of trading, guys, isn't done when we're staring at charts, you know, staring at the screens to hopefully some channel is going to drop out at us, or, you know, something is going to help make sense to us. The hard work of trading is done after hours. The hard work of trading is done the way that I eat, you know, the way that I take care of my body. It's 11 after Europe's close. Okay, so that brings us to something else. After Europe's close at 10:30 Central Time, it depends on the market. You know, these markets, we've had some really great moves take place. So remember, I don't like initiating trades after Europe's close, at least going into like a half an hour after Europe's close. So if I've got something on from the opening range that day, great, I'll let the market work it out. And because it's the capital flows are pretty much over until later on in the day. The prime capital flows, I'm looking to trade the prime capital flows. Prime capital flows are going to be from the open of the market. Now, by the way, Bitcoin is different. And I'm starting to trade Bitcoin too. So anyway, prime capital flows are going to be from the open of the market going into Europe's close. Yes, that's. I don't like trading extended trading hours. Now, I mean, I've got positions on, so I'll monitor the market. I'll monitor the price action and see where we're at. But I don't want to get too far because I don't want to get too far off yet. I want to get back to the 4 pillars of capital management and how it worked on Friday. So from target to target, from the opening range, one staging area to the next staging area, one run to the next, to the next, to the next. So Friday, traders in our group had huge days and on top of a huge week. And so many of you guys have struggled for so long trying to figure out how to make this work. You get your 2x4, you're done, right? And you do that for months because there's a progression to trading. You have to walk before you run. You want to be, I know Steve Goldstein, Alpha Minds, has this pinned on his thing is, you've on his Twitter page, to be a professional athlete, you train for years. To be an attorney, you go to school for 3 years. All of these things. Why should it be different for traders? There's a progression to it. One of the greatest things that my mentor, Mickey Hoffman, taught me when I was a new trader was, guys, I know that this is a tough pill to swallow, but I'm telling you, it's the 100% truth. If you break even your first year trading, congratulations, you're ahead of the game. If you break even your second year trading, you're onto something. If you break even your third year trading, congratulations. You've got a career as a trader. That's breaking even for your first 3 years. Both stages of my career, on the floor and off the floor, I didn't have time to break even. I had a wife and a baby, newborn baby. I only had a finite amount of money. I was bartending at night. The second phase of my career, I drove Uber, for the Christmas of 2012. I mean, it was hard. And again, in 13 for a little bit. 13 was the first 6-figure year that I had in many years. You guys all know about 5 kids. It's not enough. Uber shout out is right, Danny. 100,000, you can't raise a family on that. So I had to keep pushing. I had to go through the progression. I figured out that I've got less risk trading 4 lots than I do trading 2 lots. Think about that. I've got less risk trading 4 lots than I do trading 2 lots. Because with 4 lots, I've got much more position management open to me. Trading 2 lots, I've got to be right. And I'm not going to catch these bigger moves that cover up a lot of mistakes, or these bigger sweeps, these bigger swings. I'll put on a position like on Friday. No, not Friday because it was a range trader, but I'll put on a position from 39.12. 39.12 has been our major upside target now since December 21st of 2020. And as the market came back up through 36.56, 36.86, 37.09, 37.26, 37.48, 37.77, 38 even, 38.31, 38 half, 38.81, 29.12 is a magnet. There's always going to be magnets. I know I'm all over the place. I'm trying to make a lot of points very quickly. Not all targets are created the same. There's some targets are going to act as magnets and draw the market up. So these are going to be exit points. These are going to be places where if I'm starting to build a long position from the opening range of January down, we opened up at 36.80 something, or the first week of February. I start to build a long position. We get up to 39.12. I'm out. If I'm long a 4 lot, I'm out. If I'm long 100, I'm out, and I reverse. Now, the only other price that's close to that is going to be the yearly opening range, 37.48. That's always going to be an exit area for me too. So when I was short from 39.12, that was a high Monday. I mean, last Monday, that was the dead high of the day. But that's been our target. It's been my target since December 20th when the December S&P contract expired. Next week, or March 19th, when the March contract expires, I'll have all new targets. and they're not found on charts. It's a mathematical, equation that was the Fibonacci math that I was taught long ago, which is ironic because I can't count unless I count on my fingers. One, what's 8? I had to count. I had to think about 4 points from what's the pay line from 08, 9, 10, 11, 12. Oh, 12. Anyway, so there's a lot here, right? But I think that if there's one thing that I can get you guys to understand tonight, it's to simplify your trading. I was talking to a trader before he got on tonight, and he's got bookmap charts up. Bookmap to me looks like nothing but a bunch of beautiful colors on a chart. Oh my God, trend lines drawn all over the place, and channels. And I don't use fancy terminology or trading terminology like engulfing bears or head and shoulders or this or that. Or I see them, I pay attention to them, but I don't trade them because I wasn't taught how to trade on a computer with charts. So you can see I've got charts up all over the place, but I don't trade them. I've got my targets. I know I've given you all my targets for the next 200 points. I mean, I've given them all to you. Write them down and write them down, and more than that, draw lines on your chart to see what the market has done at those targets. And again, these are targets. Mark, Shelley, whoever else is from our group, how long have we had these very, very same targets? I massage them, but according to the price action. But I mean, why don't you guys type in there how long we've had these targets so that people aren't thinking that I'm making them up by looking at charts, because I don't. Nobody's here? Okay. Anyway, so trade your plan. You're right, CO2. It's about trading your plan. That's it. You have to have a you have to have a plan. You have to be able to trade it. I'd rather execute my plan perfectly and lose money than to execute sloppily and make money. You know that old adage that people say, I'd rather be lucky than good? Not me. I've been on the other side of about every outlying event in the markets. Never caught the lucky side of shit. I was always on the wrong side of it. My worst trade ever was January 3rd, the first trading day of 2001. You can go back and look at this. This is the truth. I don't remember exactly what the prices were, but we had a 650-point rally in the Nasdaq. That was the biggest rally. It still is the biggest rally in Nasdaq history, percentage-wise. It was a 650 full-point rally, and I was short 18 big Nasdaq. That's $18,000 every 10 points. That's 650 points on it. And by the way, along the way, I added to them. Averaged like a moron. That was the last time I ever averaged a bad trade. Greenspan cut interest rates by 50 basis points on the first trading day of the year in order to get the biggest boost out of the market. This is after the tech bubble burst. I got lucky the day that the flash crash of 2010. I wasn't trading that day. It was just off to lunch or having coffee or something. Thank God, because I would have been long. I mean, I'm on the other side of all of those things. So I'd rather be good than lucky. Good will always win out the day. This is a marathon. That's another thing. Keep things simple and realize that you've got to give the market your time. Don't give the market your money. I hear a lot of people saying that trading on the simulator is a waste of time. I can tell you that trading on the simulator is, in fact, a very valuable thing. If you can trade on the simulator the exact same way that you will trade live, then you're going to be part of one of those traders that Mickey Hoppin talked about. You break even your first year trading, you're ahead of the game. Third year trading, congratulations, you got a career. Because now, after a couple of years, you can start to determine in your plan, what are you doing that's holding you back? Not what you're doing wrong. Because, change the language that you use. You'll never hear me talk about a loser. I don't have losers, and I don't have winners. Every so often, I might say, "Oh, I had a loser here," just colloquially. But I will never say, "Oh, I had a winner," because I don't. I don't have winning trades. This is a business like any other for me. I spend money to make it. As I was describing earlier, 2x4, right? 2 trades, if I don't find it, cut my size. 4 trades, if I don't find it, put myself on the bench and look for the market to tell me something. What do I mean by that? Now I'm looking for the market. If the market is choppy out of the opening range, I put myself on the bench and I wait for the market to come to one of my targets. If it doesn't, then I don't trade that day. There are months at a time, not months, but there are days and weeks at a time where I won't take more than 1 or 2 trades, because I want to be here when the market is good. I want to be here when I sell them at 04 and I pay for them, and the market goes to 97, or I mean to 77 and so forth, down to 48, and then down to our quarterly pivot of 37.26. Does anybody know why 37.26 is the quarterly pivot? You won't find it on charts. 37.26.27 is where the December contract expired. You got to go back onto CME website, or bar chart, I think, has it, historical data. Go look for those are hugely important areas. The yearly opening range, another hugely important area. Not the last traded price for the quarter, but where the contract settled, where the CME settled the price. And there's a formula to it that's different than the last traded price. These are going to be the way to help you keep things simple and to visualize the market so that you can set a plan and then go ahead and trade that plan. Learn how to always protect yourself. Defensive trading is the most important thing that you can ever possibly do. So now in our Friday example, we come back down to the yearly opening range. You cover, so now you're flat. We get under there, you go ahead and sell a full unit, repeat the process, pay for the trade, take profit at down near 37.26. We stopped at 37.28 half, if I recall correctly. This is all off the top of my head, though. I'm looking at my iPad. I'm not looking at I don't have, this is the opening range from February 19th. I don't have numbers in front of me. I write them down, I work on them, I massage them, so I have them in my mind and printed. And they don't change. They're going to be the same. Anyway, when the market stopped 37.28 half, that was the market. Everything the market does tells me something, right? We failed to get to 37.26, 37.28 held. So as we come back up through the yearly opening range, 37.48, I flatten, I get long. Again, sell them at take profit, pay for the trade wherever. It's not 4 points, only 4 points out of the opening range, or 20 points in crude. Anyway, pay for the trade wherever I can, and now I'm taking profit at my targets on the way up. So I get long at 48, 49, 50, or 50, someplace in that area. Take profit at 77. Take profit at 38 even. We get through the opening range. I got either my runner on, which is the last quarter of my trade, or I've got half my unit on. We get through the daily opening range. Now I put on another unit. I go from being a long a 4 lot to being long a 6 lot. Or a 5 lot or 6 lot. Learn how to manage your position so that then you can not only minimize your risk, remove your risk, but you can maximize your profit by, again, having a plan and only trading that plan. When you only trade your plan, then you know what you need to massage, you know what you need to change, you know what you need to do better. My mom had a saying all when we were kids, to do better, be better, do better, be better. Come on, Manny, do better, be better. Learn how to do better and be better by sticking to your plan and refining it as you go, right? Trading is like, is like no, it's not. It's unlike any other business in that it will bring you to your knees. I don't care who you are or how wealthy you are. Trading will bring you to your knees. And you will find out who you are more so than in any other business. I know, Peter, thanks. You will find out who you are more than any other business. I think trading reveals parts of ourselves to us that I didn't learn in the seminary, that I couldn't learn anywhere. You will find out the kind of trader that you are when you're faced with something like that and a big kick in the teeth. What are you going to do? Are you going to crawl? Are you going to give up? You're going to get up and gamble it away? I got to make it back. I got to make it back. Remember, I don't have winners. I don't have losers. I make money, I have profitable trades, or I have expenses. Similarly, I don't ever trade to make back lost money. If I spent money yesterday, the day before, if I spent money 3 or 4 days in a row, which is rare, I usually don't, but if I do, I'm not trading to make back that money. I focus on only one trade, and that's the next one. I've got targets going up to 45, 42. My yearly target in the S&P, and write this down, if we get back above 39.12, we close above 39.12 twice, then we target 40.08, then 40 half, then 41.17. Our yearly target in the S&P is 45.42. That, that doesn't mean that we don't go to our downside target, 35.40. We can go to 35.40. I'm a trader. I don't predict the markets. Somebody asked me today, Rob Passarella on Twitter asked me, PM asked me what I thought about the market. I said, I'm not paid to think. I'm paid to react, period. I think we're going higher. I think we're, like anybody else, you guys all, hopefully you guys all hear conversations with me and Ira, Ira Harris. Please listen to Ira Harris. Please go to YouTube and listen to every conversation that I've ever had with Ira. I mean, I'm a student constantly learning. Ira Harris is one of the most well-known, most well-respected, not just global macro analysts, but also the most well-respected global macro traders. He's up there with Druckenmiller and Tudor Jones. He wouldn't say that, but he is. He's up there. He's also on the board of directors of the CME Group. Ira Harris is actually one of the main reasons we are all here talking about this. Sorry. There wouldn't be CME if there wasn't, if not for Ira. And Ira worked with I can talk about that for hours. But Leo Melamed, if you guys don't know who Leo Melamed is, go Google him. I mean, that's every time I see Leo in the hall, I would thank him. Thank you, Leo. Thank you, Leo. Thank you, Leo. It wasn't until years later when his son Jordan was filming a documentary about me that I was at his house with my kids, Leo Malamed's house, where Leo finally asked me, Pax, why do you thank me every time you see me? Shit, Leo, are you kidding? If it wasn't for you, I'd be driving a truck. If you didn't invent this stuff, you didn't take the CME from an onion and egg exchange into the pork belly exchange, into the currency market, into interest rate trading and equity trading, none of us would be here. Not to mention the fact that he kept it from the archaic pit. None of us wanted the pits to close, but Leo and Ira also brought it up to, along with Jimmy Olaf and others, but pushed through electronic trading, and I love the pits. I love the trading floor. I love the camaraderie. It was so much fun. Some of the worst people I've ever met in the world, but also I've witnessed some of the most generous acts of kindness and the conversations that we've had down there. Oh my gosh, I learned more on the trading floor than any other place. And that's really one of the reasons why I started tweeting. My friend Kevin was I was helping, you guys all see Dun White Paper on my feed, Kevin Kearns. I was mentoring him, and he was coming to my house. He was one of my dear friends. He was coming to my house, and I was teaching him how to trade, and took his family back to Ireland, where he's from, and he asked me to tweet my trades. Yeah, okay. You don't want to have to pay for texting. So I did, and then I think it was Credelli or Jimmy Jude asked me if I was me. Is this PAX from the Nasdaq? And it's yes. And I went from 5 followers from my son's travel baseball team to 200 overnight, and I kept tweeting my trades, and then we started. It was I kept wondering, how do you guys learn how to trade? How many frogs do you need to kiss before you find your prince that's gonna maybe I shouldn't use that example anymore. I don't know what's proper and what's not, so forgive me if that sounded sexist. Oh Lord, forgive me for apologizing for that. Anyway, listen, seriously, I don't know how you guys learn how to trade. I really don't. I mean, you've got rooms and sub-services and this and that and all kinds of things out there. How do you figure it out? How do you learn who to trust? How do you learn how to trust yourself? How do you learn how to get over fear? How do you learn how to simplify your markets? How do you learn how to take all of the garbage off your screen so that you can focus on visualizing the market and taking action, right? I mean, I can go through, all right, so now we're long a 6 lot, we sell them, pay for the trade and blah, 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 up to 38.5, and we're still long. I can, go through example after example after example like that. But one of the reasons why we got Ira and I have these conversations is because, and we do it in my group, so that everybody can ask questions, is that I'm still learning how to put the global macro picture together. When I was a new trader, like I said earlier, Judd Hirschberg made me read the Financial Times. I didn't even know what the Financial Times was. I didn't know anything but the sports section in the Tribune, in the Chicago Sun-Times, or Mike Royko's articles in the Trib. Screen time is right, but based on what? Based on market profile? Based on somebody's interpretation of charts? Again, I don't have to pretend. I'm a trader. I don't predict the markets. I don't have to know where the market's going. I just have to know where the market, what I'm going to do when the market gets from here to there to here to there. Once I know how to do that, then I can make money and I can be profitable, as long as I don't become overly aggressive at the expense of defense. Defense is the most important part. Defensive trading is the most important part of any trading, defensive trading or capital preservation. You'll see me tweet every Friday, Happy Capital Preservation Friday. It's so important to never lose sight of defensive trading as the best offense. Now, this space that I've ended up creating was a space to be able to kind of replicate what we did on the floor, but also with real traders that can be verifiable, not somebody hiding behind a Twitter handle or, behind a name and that's somebody that is verifiable. You can call Terry Duffy's office, the chairman of the CME, and you can ask him about me and he'll tell you. You can ask Ira Harris, a member of the board of directors of CME. I'm verifiable. There's pictures of me all over the internet. There's a documentary that I'm in. There's all kinds of things. So I wanted to create a space where there were other traders like that, with Ira Harris and multiple Shelley, multiple experienced traders who can share ideas, who can learn how to simplify their trading, who can simplify everything so that you can just take things to the next level. How do you take things to the next level? All right. Do you guys have any questions about any of the last? I droned on for too long. I always do that. Do you guys have any other questions? Do one market, Nasdaq, yes, I agree on risk learn the personality of the market. Yes, absolutely. You're right. Oh, thanks, Corinne. But listen, sister, I can I can talk about two things for days, and anybody in our group knows it. I can talk about trading. I can talk about trading for days and days and days, and I can talk about something that you and I have messaged about, which is my mentoring groups that I've started on the south side of Chicago, the Pillars Club and others, which are about it's not about race relations. It's just about making kids better. Giving kids an outlet. I started a group a few years ago with this is back in 08, actually 07. With Father Flager at St. Sabina's. It didn't end up coming to fruition. Me and 21, it was me, I was the only white guy in it. Me and 21 African-American members of Chicago Mercantile Exchange started our group where we're going to teach at-risk kids about trading. Hey, you can drive a Mercedes or a BMW or a Range Rover without having to go to jail or shoot or be shot. There is hope. It didn't end up working out. Father Flager wanted to do a series of press conferences, and not one of our guys wanted to do that. And then my mom died, and things just kind of drifted off. Those are the two things I can talk forever and ever and ever about. Do you guys have any questions about my career, about my process, about anything? You give yourself time, trade on the simulator, learn how to trade the price action, trade the momentum. This is another thing too. I don't trade back lost money. I don't lose money, first of all, and I don't trade back spent money. I don't. I focus on the next trade, and that's it. Focus on the next trade while I plan for 50 trades down the road, but I only focus on that next one. Yes, I can. But also, the other things too is I don't trade back lost money, but I don't buy breaks, and I don't sell. I do not fade markets. I don't fade markets. Now, with that said, I don't fade markets, but I will trade my targets, depending on my targets, as another form of the opening range. So In Friday's example, 38.84. If I got out, if I exited my trade at 37.48 and I got long, that, you know, most people I think would consider that fading that break. But not me. I consider that trading that as another version of the opening range. I do, Mark. Yes, I do, of course. Right now, we're stuck. Here's the way that I see the market. We're stuck in a big, gigantic range. And again, 39.12 has been our major upside target based upon the December contract expiration of 37.26 and the September expiration contract. Anybody know what price September expired at? September S&P? No, of course not. 33.53, 37.26, 33.53. That was that produces the 39.12 target. That produces the major upside target that will act as a magnet. And we'll have new targets again when March expires next week. Oh, I don't like rollover. I don't like rollover. I will take it easy. Although I made a ton of money last year, March rollover. But you know, like I was just about to start saying, I don't fade markets. I don't sell rallies. I don't buy breaks. I try to trade with the trend, right, or go with the momentum of the market. And I got some funny ass stories about my partner in the prop room. You know, meeting Linda Rashke. Yeah, my prop room was based out of, I rented space from Damon Pavlonis, Linda's husband, and that'll be too far off base, but it's funny as hell. I can tell stories about Mike Walsh. Who was asking me about Mike Walsh the other day on Twitter? I do know Linda, yes. It was on Danny Sitlow and I were on Damon's boat last summer or summer before. Does anybody remember Mike Walsh from the documentary Floored? Oh my God, what a nut he was. Anyway, I can tell stories like that. Maybe we'll do that next week or do it again. You say you learned the 2x4. I did, yes. Not the 2x4 itself, but Tudor Jones I had met Tudor Jones at a fundraiser. And I thought, you know, he's got to know me. I'm a big Nasdaq trader. I walked over to him and I shook his hand, introduced myself, and he said, "Yeah, okay, see you, kid. Hey, thanks for being here." And he walked away. Wait a second, don't you know I am? I'm coming. Just call Jen and tell him we'll be a few minutes late. We got dinner reservations. Of course, I droned on and on and on. Walsh is a maniac. Yeah. Hold on. So, all right, what other questions you guys have? I'm so sorry I ended up droning on too much. I do consider the trend in the opening when I'm trading the opening range breakout. But so, that's another thing, Mark. I've got different accounts with different firms. So I'll trade from one group to go into another group. I'll trade one account and I can move into another account. And in some cases, I used to be able to do give up. I had a give up agreement between RJO and RCG, but I don't clear either one of them anymore. But anyway, I can move within one firm. You can move a position from one account to another. So I might be short S&P in one account, and I'll flip out. I have CQG as my trading front end, CQG integrated client. So I will, I can switch out, just right click. I'm in a different account. So if I'm short in one account and we have an opening range breakout to the upside, I'll get long and I'll trade from the long side. Meanwhile, I'm maintaining my shorts from 39.12, and we're trading at 37.80, and I'm still short in one account and long in another. There's also a way I can show you guys how to do this, where you keep track of your accounts. FIFO will screw up first in, first out. Every front end will have your average up there. What I did, all of these little tricks helped me so greatly. I took my P&L off my screens years ago. I don't know where I am. I don't know what my money is. I mean, obviously I have an idea, and usually I'm pretty spot on. But taking my P&L off has helped me manage my positions by focusing on my quantity and the price action and not my money. That's important. It's really important. Take your P&L off your screens and focus on the market. Now, also, while you're learning on the simulator, please realize that this is a long process. Okay, don't get discouraged after 6 months. There's two parts to every trade: managing your risk and managing your profit. Every trade has got the same two parts. You've got to learn how to manage your risk, and then you have to learn how to manage your profit. There's different lanes. There are, I think, like four different kinds of traders. There's the traders that are on the roller coaster. They make 10,000 and lose 30. They're constantly pouring money into their accounts. Roller coaster traders. Then you progress from there. They don't know how to manage their risk. The people that are, those of you guys who are on the roller coaster, you don't learn how to manage your risk yet. Then you've got traders that are breaking even, and those traders have learned how to manage their risk, but they have not yet learned how to manage their profit. But they're breaking even. They haven't gotten to the second part yet. Then you have the traders, number three, the third lane. You've got traders that are consistently profitable. And then the fourth lane is like the 2% of us or the 1% of us that make, into the seven figures of trading. Traders that are consistently profitable they've learned how to manage their risk, and they've learned how to manage their profit. Traders that are ultimately profitable have learned how to manage their risk, their profit, and how to exploit their profit, which is the fourth pillar of the four pillars of capital management. Learning how to increase. How about this one? Does anybody think that you can increase your size without increasing your risk? Because you can. It takes a while. It takes a lot of hard work to figure that out. But yes, you can manage your risk. You can manage your profit, and you can change it. You can manage. There are definite, and these are not vague. I can't stand that shit too. I don't like when traders are fucking vague, like, what do you think the market's going to do? Oh, I think that if we retest and we take a double retest and we got a bull flag and a bear fucking, I don't know. We got an engulfing bull. We got an engulfing. What? Listen, the market's going to go higher, lower, or nowhere. And so I don't like that kind of stuff. And people are vague and they predict markets, and none of that works. I don't need to predict anything. I'm a trader. I'm going to trade it. And when I find it, I'm going to exploit it. But yes, there's a few different ways that you can learn how to increase your size without increasing your risk, to go to a 4-lot to an 8-lot with the risk of a 4-lot. Or to go from a 4-lot to an 8-lot with absolutely no risk. It takes a long time to figure this out. That's another thing too. There's no golden chart. There is no magic matrix or great formula or anything like that. There are a million ways to make money trading futures. There really are, or trading anything. There really are. Trading the opening range is going to work in stocks. It'll work in any commodity. And it works also in Bitcoin, only on the weekly reopen. Oh shit. I don't know what Bitcoin is. So anyway, there are a lot of different ways to make money trading, a million different ways to make money trading. But the problem is there are 20 million ways, 51,428. Thank you, Kaz. 51,428. That's going to be like the opening range for Bitcoin. I haven't done my Bitcoin targets yet for the week, but just use that as like the pivot. Right? I want to make this point because it's important. There are a million ways to make money trading futures, but there are 10 million ways to lose money. And most of those ways we don't experience, we don't know until, we get there. That's why it's so important to simplify your trading and learn how to visualize the market. From the market, we're doing one of three things. I can't stress this enough. It's this simple: higher, lower, or nowhere. And if the market is going to chop around the opening range, that's one criticism that people will throw at me. Oh, PAX, if I'm trading the opening range, I'm just going to get chopped up. Well, Yeah, you're right. That's why you have to learn how to do it. Learn how to do it by trading on the simulator. Give the market your time, not your money. I hear people talk about, you have to blow up accounts before you get it together. I don't believe that. I don't believe it. I think it helps. I've definitely become, a much better trader because I've struggled, but I never blew accounts. I mean, I have, but I've been profitable all the way along. I left the floor with way more money than what I started with. Although, my ex-wife and my kids had whatnot, right? But, and that's another thing too. I don't give a shit what I make in a month. I don't care what I make in a year. I don't care what somebody makes in 5 years or 10 years. The only true measure of success, is what you take with you when you are done trading for active income. That's it. That's it. I've had some pretty impressive houses in my life. I've owned, my ex-wife and I owned 7 homes between, in 6 years of marriage. Not all together. I mean, 3 or 4 all together. But my wife now, Jen and I don't own anything. I don't have a trading account in my name. I don't own a home. I don't own a car. I don't own a phone. I own clothes, and maybe even the clothes I don't own. Everything I have is held in corporate names, or and those corporate, like even my trading accounts are all LLCs, all 4 of them, and all of those LLCs are held by trusts. And it might be overkill, but if there's another MF global event, and I'm sure that there will be, I'm not going to get hurt by it. I won't get hurt by it. Another thing I wanted to touch on is make sure you properly fund your tax accounts, please. Got to simplify your trading, give time, but also learn how to fund your tax accounts properly. I've seen a lot of traders destroy their careers because they didn't fund their tax accounts. They end up making $2 million for the year, but they get whacked with a $500,000 or $800,000 federal tax thing. That destroys their career because now you're pulled back into trading your money. Oh, I got to hurry up and I got to make this. That's another thing. If you are under pressure to make money, if you are going to pay your rent, you're going to pay your mortgage through the money that you're going to earn from trading, you're in trouble because it's going to force you into trading the money. Now, albeit I didn't do this in either one of the phases of my career, but as of course Mick taught us, as he did all 6,000 of the traders that he mentored and taught through the years, that you should have at least enough money for 1 year's worth of bills when you start trading in reserve to be able to pay your mortgage, your rent, whatever you need to pay, or have a second job that provides a steady income so that you can take the pressure off. Carefree, fearless, focused. CCFF every morning. Am I carefree? Am I worried about paying a mortgage on the homes that we have, or am I worried about I don't know, my health issues? Am I carefree? Am I confident? No matter what happened to me, and I think that if Dan Emmons is still here, I've talked to him about this. No matter whatever happened to me, and this is something that you guys can go look at me and Anthony Crudelli's show that we did with Mickey, I think, and his daughter Danny was part of our group. I asked Mick, what's one common thread that runs across every successful trader you've ever known? And without hesitation, he responded, confidence, a deep-seated self-confidence that no matter what happens will never extinguish. And I can't tell you how relentless, yes, that too. I can't tell you how difficult my life had gotten in some spaces. And I know my brother Dan Emmons, M-Inspired, knows exactly what I'm talking about right now. I can't tell you how fucking hard it was when I moved my family from Lake Forest, Illinois, in a 7-figure home to the south side of Chicago, my dad's house. Can't tell you how hard that was. But I never stopped believing in myself. I didn't trust myself. I didn't know how I was going to get us out of it, but I knew that eventually I would. I believed in myself that much. It may have only been a flicker or a pilot light, but that self-confidence never went out. So am I confident? Am I sitting there thinking, you know, am I foggy? Am I just not on top of my game or feeling good? Well, I've got to recognize that. Am I fearless? Am I afraid of, you know, the markets are going to be busy, or they're going to be, you know, then I either have to cut my size or I have to stop. Am I focused? Did I sleep well? Did I go through my morning routine? Did I give myself enough time? Am I focused? Every great trader, or every good trader, you know, part of learning how to manage your risk, and part of you write the two parts of every trade: managing your risk, managing your profit. Every great trader, and this is so difficult for so many you're right, Gus. So many great traders have to all traders have to learn how to go big, go small, or not at all. When do you increase your size? When do you decrease your size? And when do you decide not to trade? Because remember, not trading is in fact a trading decision. Not trading is the same as being long or short. In fact, it's maybe even more important. I missed most of Friday's trade. I had a big week last week. I missed most of Friday's trade. You know what? It didn't bother me. It didn't bother me. Why? Because I know when I miss Friday, there'll be more. If I miss a trade, all right, I'll get up and make a pot of tea. I come back down, you know, and I'll talk to the traders in my group. You know, I'll answer questions, whatever. Why? Because there's going to be plenty of them. There's going to be plenty of them. Dan, my brother Dan Emmons. I love this kid. He's out there driving Uber, and right now, driving Uber, and he's busting his ass to make it back into trading. Busting his ass to be able to make his comeback. And this experience that he's going through right now is going to make him a better trader than what he ever imagined. He might not understand that right now, except for that deep flicker, you know, that deep self-confidence. Iron sharpens iron. You know, people sharpen people. I don't think the Old Testament said that. I think it was, you know what I mean? But, you know, we have to all learn how to increase our size, decrease our size, and when not to trade. Because there'll always be another trade, Dan. There's always going to be more. If you miss the best bear market or the best bull market in history, guess what? There'll be another one. I missed 08 and 09 when my mother was dying, and my sister, and when Kathleen and my mom, my sister Elizabeth were all dying. I missed it. And it didn't bother me. What bothered me was the fact that my prop room went under, but I knew that there would be more. There'll always be another trade. Don't chase it. Don't chase money. Don't chase trades. If you had a trade set up that you're waiting for, and you know you got distracted, or you went to the bathroom or something and you missed it, so what? There'll be another one. There'll be more. There'll be better ones. One other thing too, and you guys, if you have questions, throw them at me, because my wife is going to come down here in a minute and start pulling me by the ear. We're going to go to, if anybody's in Chicago, we're going to go to Victory Tap for dinner. The place is great. It's owned by a friend of mine, Joey Farina. It's one of the great restaurants that I said no to investing. And I've invested in every fucking restaurant in the city of Chicago. Every one that went under. Never one that went good. Holy cow. Anyway, when you walk into your room, your office, if your screens are, if you live in a what do they call those? Studios. If you live in a studio apartment and your screens are right next to your bed, get up, walk through that threshold of your apartment, and when you sit down in front of your screens, determine whether or not you are confident, carefree, fearless, and focused. Determine whether or not you are CCFF. Make your judgments. Where is the market opening? What will be the size that I trade today? But when you walk through that threshold, whatever is going on in your life, you're fighting with your boyfriend, your girlfriend, your husband, your wife, your partner, whatever. You've got health issues, you got money issues, whatever you've got going, you walk through that threshold of your office, you leave it all at that door. You cannot bring that into your trading. If you had a great week last week, many of us did, you're not the next Warren Buffett. You're not the next Paul Tudor Jones. Every trade, take it one trade at a time, and we'll be okay. Learn how to give it time. Learn how to give the market your time and not your money. You know, a lot of times when I'm talking about the markets, I close my eyes because I'm a visual person. I need to see things. When I'm talking, I close my eyes so that I can see, you know, and visualize things. I have to visualize where the market's going. That means I have to have targets. That means that my targets are going to be a roadmap for me to trade that next day on. And if we close above or below a certain level, I'm going to take the last quarter of my position home, which becomes my runner. And my runner stop becomes, break even or at one of the important levels or targets in my plan. So that I can start to build a swing position or a longer term position with no risk. And I mean it, with no risk. Trading is life and life is trading, Gus. Oh my gosh, is that so true? The hard work of trading is done outside of trading hours. If you find yourself starting, oh God, I can talk for days and hours. There's a chemical reaction that goes off in our brains every time we hit that computer that becomes addictive. Dopamine, cortisone, whatever kind of, all kinds of stuff. When I go on vacation, when I take my family on vacation, I don't trade. I never, ever, ever trade on, well, I used to. No, I've learned from experience. There isn't a mistake that you guys can make that I have not already made. Trust me when I tell you this. Whatever you guys have, whatever mistakes you've made or you're making, I've already done too often. And many I got away with, which is worse. You get away with the mistake, that's getting rewarded for bad behavior. You're bound to repeat it. And if you're bound to repeat it, you throw your money out the window. Good money after bad. I don't trade on vacation because I have, I'm in a different state of mind. I keep track of my targets. I target out the market every day. Even on vacation, I'll target out the markets every time we're away, but I won't trade because there's that chemical reaction that will pull me back into trading that becomes addictive, and there's just a whole lot to it. And, I really want to get across the point. When I was on the trading floor, I walked on, we walked on through a turnstile. We had to take our badge, run it through a thing. We got on the floor. And I made a point, and this is something else I learned from Mick too. I made a point of leaving whatever I had going on. My marriage was falling apart. My first marriage was falling apart. I left it at the turnstile. Similarly, when I walk into my office just with the intent to trade, whatever I've got going on in my life is out that room. I don't bring it into my trading. And if I do, I protect myself by cutting my size by determining I'm not confident, carefree, fearless, and focused. Or I cut my size 2 trades, cut my size 4 trades, I'm out. That's where trust comes in. I have to trust myself in order to stick to my process, right? I've got to trust that I'm going to live by my 2x4 rule. I have to trust it because if I don't, I'm in big trouble. Thank you. Thank you, CO2 W7. It's a mouthful. Learning how to trade, back to Gus's point too, learning how to trade, we're human beings. We're never going to trade emotion free, but we have to learn how to trade emotionless. I talk about I talked about this today with the trader I'd like to do a lot of my mentoring on the weekends because I don't have market stuff in my mind. I can relax, but we were talking about the I lost my train of thought. Damn. What was I saying there? Pedro or Shelly or one of you guys who are used to remembering that I forget shit. Oh. All right, any questions before? Yeah, trading emotionless, but I forgot what I was going to say. Automating. So, when I sell, if the market, remember 4 pillars of capital management, right? So if I sell 04s and the market protects me by staying 04 off or beneath it, then I put my stop just inside of the opening range and I put my bid in to pay for it. And I put my bid in to take profit. It's automated. I remove my emotions out of my trading the second that the market protects me. Now remember, either the market protects me or I've got to protect me. So if I sell 04s, the market stays 04 off or the market's protecting me. I put my stop just inside of the opening range, so I'm protected. It becomes automated and it takes me out of it. And then I pay for my trade, move my stop, change my quantity, bring it in. Yeah, like OCOs, yeah. If anybody's wondering what an OCO means, that means one order cancels another. So if I have a stop in it, if I put my stop in at 04 quarter, and I've got bids in at the pay line at even, or at the target, and I get filled, and my stop, my bids are canceled. And similarly, well, actually not on my OCOs. All right, so learn how to simplify your trading. Learn how to visualize the market. Learn how to make a plan and stick to it. Learn how to trust yourself. Learn how to believe in yourself. Give time. Don't give the market your time. Is there anything else that I'm missing that you guys wanted me, on Twitter that I talk about that you guys wanted me to talk a little bit about? I really am sorry. I think I went off topic a little bit too much, especially in the beginning when I was giving the backstory. Is there anything? Thank you, Gus. If you guys want to do this more often, just let me know. I'd be happy to. I mean, obviously, I can talk about trading for hours and hours, and I got all kinds of great stories. I got great stories. Holy moly, I got great stories. I can tell you guys about Mike Walsh from Florida. Go watch Florida, and I'll tell you a little bit about Mike Walsh beating himself up. Or my God, Tudor Jones, Dayton. When I met Tudor Jones, that was humiliating. I walked away with my tail between my legs, like, what a moron. All right, everybody, this is what I say every day when the markets close and we shut down is, my mother, there were 5 of us and there's 3 of us left. But when my mom would put us to bed, she'd always say the same thing. She'd always say, good night, boys, sleep with the angels and all the saints. So I say that to everybody when we get off, is every night is sleep with the angels and all the saints, everybody. And then the last part is, and I love this, and this is our tagline, is nobody fights alone. Nobody fights alone. Trading is not a team sport. It's not, nobody can make you or help you not press the button or whatever. Trading is not a team sport. In fact, it's one of the loneliest, or it can be one of the loneliest professions in the world, but we can't do it alone. We can't. I don't know how people do it alone. I don't know how you guys do it with all of the garbage out there, with all of the people taking advantage of other people. I really don't. Find a good spot, find a good group, find a good mentor, and stick to it. Learn how to bring your gifts and your personality into your trading, and learn how to remove your weaknesses from your trading. Make your strengths stronger and your weaknesses less prevalent in your trading. Learn how to become more and more consistent. I've got to go. We're already late. So everybody, sleep with the angels and all the saints, and nobody fights alone. God bless you all. Thank you very much for being here, and we'll do these again.